Hello, this is Amazing Bob United, and you're presenting on Fan Milk Ltd. So I'm Alexander Wilson with Aziz Taiwo and Godfred Agri. Our presentation is based on whether to buy, sell, or hold shares in Fan Milk Ltd. So before we start, I'd like you to know a little about Fan Milk Ltd. Fan Milk Ltd has been existing for 61 years. It was listed on the stock exchange in 1991, and Fan Milk operates in the food and beverage industry. It basically deals in dairy products. So first, if you're looking at the industry economic characteristics, that's the Porter force analysis. It is based on the competitive variable, bargaining force of customers, bargaining power of suppliers, the threat of subsidy, and the threat of the entrance. With the competitive variable in the food and beverage industry, there's a strong force since there's large number of firms. Aggressiveness of sales and advertising is very, very strong, and also the customers are able to switch from one product to the other very, very easily. With the bargaining power of customers, there's also a strong force since the availability of substitute, there's high availability of substitute in the industry, and there's large number of producers, and also customers are able to switch from one product to the other very easily. Bargaining power on the side of suppliers, the force is very weak because supply there's large number of suppliers in the foreign market since farmers get their raw materials in the foreign market, and so therefore they're able to move from one supply to the other in the foreign market, giving suppliers a very, very weak force. And the threat of substitute, there's a strong force. Looking at the competitive variable where there's a strong force, since the competition is very, very high, the customers are able to switch from one substitute to the other very easily and bear no cost. And also the relative price performance of substitutes is it's okay since other substitutes will provide the same level of satisfaction to consumers. And the threat of new entrants, there's a moderate force because entry into the market, the capital cost is very, very variable. That's a moderate force, and government require government requirement is not that strict when it comes to the food and beverage industry. And if you're able to raise your own capital, you're able to contribute or be able to partake in the industry. And also with the brand development, brand loyalty, it also depends on the individual or the company entering to the industry. If you're able to develop your own, build your own brand, you're able to enter into the industry. So it basically all depends on the capital cost. Also, with the strategies Farmwork implemented in 2019, we have the customer service development and expansion of food distribution outreach channels, portfolio and product innovation. Under the customer service development, Farmwork did that through sales automation and increasing the distribution agents by 240 new agents. So the sales automation basically deals with automating the process between the sales agents and the distributors. And under the portfolio and product innovation, Farm Milk introduced some new product, that's the Super Yogo. They also increased their prices of some of their existing products by 20%. And they introduced new products of different sizes to suit all income levels. We will be assessing the quality of the financial statement of Farm Milk. Some scholars propose a format for assessing the quality. It was categorized into three stages: that's parity, completeness, and normality test. With the parity, I'm looking at Farm Milk financial statement from 2018 to 2020. All the additions and subtractions were made correctly. There was, as in terms of accounting equalities and inequalities, and every information was provided. That's the completeness. Every needed information was provided in the statement. With the normality test, we have the double factor score and the single factor score. That is, we compare, let's say we take the total asset, then we strike the current asset to the total asset and see the percentage of the total assets. The percentage of total assets that can be represented by the current asset. So when you do current asset to total asset, we had a percentage of 21.78. That represents a fairly normal figure for current assets. But if we were to get 90%, that would be abnormal. So that's what the normality test is all about. So there's gross profit to assets, then when you got something 27.69%, that's a normal figure. Getting something like a 95% would be abnormal. That's what the normality test is all about. So when we say double, that means you are going two sided. When we say single, you are going one sided. And there's the audited statement for 2018-2019, which the auditor stated that the company prepared their statements in accordance with the international financial reporting standards, that's the IFRS and the AIS. I'm Godfred Agri. Adding up to what you said earlier, we also examined the performance of the firm, how effectively and efficiently they use their resources, the state of the company, that's whether they make profit or loss, and how risky it is to invest in the company. Looking at the profitability ratio, that's from 2018 to 2019, you could see there was an increase in the percentages. Then looking at the 2020 figures, you could see, though they were making profit, but you could see from 2019 to 2020, there was a fall in the percentages, and this was mainly due to the coronavirus. Also, looking at the liquidity ratios, you could see in the current ratios that the company was able to finance all of its liability fully with its current assets at its disposal, and without the inventory, it wasn't able to finance it fully. Okay, then according to Infront Analytics, we could see that the risk score for Fan Milk Ltd was 5.0, which is moderate.
Hello, I'm Abdulaziz Tairu, and I'll be handling why you should invest in Fan Milk Ltd. So there are a couple of reasons why you should invest in Fan Milk Ltd, but I'll begin with the value of the firm. First of all, Fan Milk Ltd has an intrinsic value of 3.9 Ghana cedis. That is when you use the discounted cash flow model. And when you compare this intrinsic value of 3 cedi 90 pesos to the current share price of 1 cedi 9 pesos, you realize that the share price of Fan Milk Ltd has been undervalued by 258%. So we expect the market to correct itself in the near future. Hence, the 258% undervaluation will translate into potential wealth gain for investors. So it is based on this we pitch for a buy or hold position in Fan Milk Ltd. Aside that, selling at this point in the company's finances is very unprofitable to investors and may potentially lose, judging from the company's previous stock prices. So we strongly recommend a buy or hold position in Fan Milk Ltd. Thank you.